Bitcoin approaching 61,000 this morning as the SEC approves the first futures-based Bitcoin ETF. Good news for Bitcoin owners. And of course, over the last couple of weeks, this has really been something that Bitcoin has already really been pricing in. The Grayscale Bitcoin Trust, which is one of the existing ETFs right now that own Bitcoin, has been rallying here sharply over the last couple of weeks, particularly with the price of Bitcoin. Bitcoin this morning up above $60,000 as the Bitcoin ETF Trust has gone up about 100% in that same period of time. So what will this do? Of course, this obviously opens up to more people to get invested into Bitcoin. Of course, a futures-based Bitcoin, a little bit different structure, but this also opens the floodgate now for just a plethora of other Bitcoin issuers to come out and issue Bitcoin-based ETFs using futures and options. Of course, that creates more interest not only in Bitcoin, but also provides inflows into the Bitcoin itself. Another reason why Bitcoin has been rallying so sharply ahead of this in the near term. Good news for Bitcoin owners, of course, is that this is the next kind of innovation here in the Bitcoin world. You know, the one thing we haven't really seen yet is mass adoption of Bitcoin by businesses where you can use Bitcoin to purchase or to exchange for product or services. That still has been something that's been a bit elusive at this point. A lot of that has to do with the volatility of Bitcoin, particularly as accepting it as payment for goods or services. Again, you know, for producers, they need some stability in the currency they're using to get payment for goods or services they're providing. So once we begin to see the volatility slow down, I'm sure we'll start to see more adoption within the actual commercial space itself. Moving over to the market this morning, futures are down just a hair this morning after a very big surge last week with the S&P getting above the 50-day moving average. Good news there as we move into the seasonally strong period of the year. This sets the market up right now for a move to all-time highs. Hopefully here we'll see earnings support that. Now, so far we've seen earnings from mostly financial institutions that don't have to deal with supply chain disruptions or have to really as much of an impact from inflationary pressures. We're going to see a lot more of those companies over the course of the next 2 weeks, in particular from the S&P, discussing what inflation is doing to their profit margins, how it's impacting earnings and sales, and more importantly, is the pressure of inflation eroding those ever precious margins? We're going to watch that very closely here, but we could see a bit more trouble for stocks if the announcements come in weaker than expected. That's the one thing that could deter the markets here a bit in the short term. That, and of course, the Fed starting their taper in November. Those are kind of the two big headline risks out there right now for stocks. But in the near term, the break above the 50-day moving average certainly sets the market up now for a rally back towards all-time highs as we move into the end of the year. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.